Hello everyone, a happy Friday morning. It's August 26th and today we'll be looking at the US versus the Canadian dollar before the Jackson Hole key central bank event takes place later today. And what we see in the daily chart is that the pair continues to lack direction in the short-term picture, trading sideways instead below the 20-month high of 1.3222 reached in mid-July. But what is striking here is that if we switch to the weekly chart, we can see that the pair remains below the flattening 200 weekly moving average for another week, despite its flash spike above that line earlier this week. That line has been constantly rejecting bullish corrections since the start of May. Therefore, the 1.3026 level, where that line is flattening, will remain in focus in the coming sessions. But in the meantime, the technical signals in the daily chart cannot support any meaningful rally, although the pair post its latest bearish correction around its 20 and 50-day moving averages. We can see that the RSI is still maintaining a downward trajectory within the positive area and just above its 50 neutral mark. The MACD remains stable above its red signal line, and the stochastics have already shifted to the downside. So the short-term bias is not very clear yet, but a close above the nearby resistance of 1.2963, where the bullish corrections where the bullish corrections have been posing over the past 2 days could bring the 1.3026 key level back under the spotlight. It's also worthy to know that the 23.6% Fibonacci of the uplift from 1.2401 to 1.3222 is also placed around this region, and we can also create a tentative descending trend line passing through this area as well. Therefore, all eyes will be on 1.3026, but even if the price manages to cross above that bar, I would still maintain some caution until the price sustainably moves above the 1.3057 and 1.3077 key resistance territory, where the price posed several times since mid-May. Any break higher from here could then face another barrier at 1.3120, and once we break that level, I expect a direct flight towards the 20-month high of 1.3222. Now in the bear scenario, where the price retreats below the 50 and 20-day moving averages, where the 38.2% Fibonacci of 1.29 and that tentative short-term ascending trend line are located, then we will probably see a sharp decline towards the 50% Fibonacci of 1.28. The 200-day moving average could also attract attention around 1.2760, because any failure to pivot here could see another sharp depreciation towards the long-term support trend line coming from the 2021 low of 1.2006. The 61.8% Fibonacci of 1.2660 is also within this region. So making a brief conclusion now, while the technical signals are currently poor for the short-term trading and not in favor of sharp upside increases, nevertheless, I suspect that downside pressures may remain in play as long as the price continues to trade below 1.3026. So that's all for dollar loonie today. Thank you for watching. Have a great weekend.